6:21 on your Monday morning, and it's time to take a look at your money. For most people, gold is usually associated with fancy jewelry and other high-end luxury items. But for centuries, individuals and financial institutions around the world have used gold as a form of investment. On Friday, the price of gold reached an all-time high of $3,117 per ounce. Now, over the past 12 months, it's risen nearly 40%. So what's behind this ongoing surge in gold prices? Financial advisor Mark Ravicheski is joining us now on Zoom to break it down for us. Good morning, Mark.
Morning to you, Ava. Happy Monday. Great to see you again.
Nice to see you too, Mark. So first off, why is gold used as an investment?
Well, throughout history, Ava, if you think about it, we've seen individual companies, national economies, even entire countries collapse. And those respective stocks, bonds, and currencies quickly become worthless or near worthless. But for centuries, gold has proven its ability to store wealth. And investors buy gold and other precious metals, such as silver, platinum, because they see it as a constant, tangible asset that will always have some type of value. So, gold is often viewed as a safe haven or a hedge against global uncertainty and market turbulence.
So Mark, why have gold prices been rising so much over the past year?
Remember, during times of global uncertainty, economic uncertainty, that rise in global demand for gold inherently drives gold prices higher. And look, over the past few years, gold prices have been steadily rising from a number of factors. Earlier on, Ava, it was that Russia-Ukraine war and the war between Israel and Hamas. More recently, though, it's this escalation in trade wars between the U.S. and many of our key trading partners. So, all of these apprehensions and anxieties have many investors buying gold as a hedge against further uncertainty. Now, on Wednesday, President Trump is set to announce a global tariff on all imported goods. We'll see what version ultimately gets laid out, and what we're seeing in gold prices over the past few days. But look, also for the stock market and the bond market is this very fluid and reactionary up and down movement in prices on this continued escalation, de-escalation in these tariffs. And on Wednesday, that global tariff is yet another escalation in these trade wars. And we're seeing the gold market, bond market, stock market react accordingly.
And Mark, finally, what are some other things to consider if someone does want to buy gold as an investment?
Well, like many investments, obviously the main caveat is gold can be a very volatile investment with these big, up and down swings in its price. But unlike and most stocks and bonds, gold doesn't pay any dividends or interest. So if you're relying on a stream of dividends or maybe interest payments to help supplement your retirement or living expenses, gold won't provide that income stream. Now, there are two main ways to buy gold as an investment. The first is to go out and buy physical gold from a reputable dealer. There's gold coins, gold bars, which are typically sold in those 1 ounce increments. But second, you can also buy into investment funds that track the performance of the price of gold. And this can be a much more easier and efficient way to invest in gold.
All right. Well, thank you so much, Mark, and we'll see you next Monday.
All right. Great seeing you again, Ava. Take care.
You too.